Thank you very much. Can you hear us? Can you hear me? Perfect. Cool. So thank you very much. It's Donato from BD.
And this is Baran from Client Success Team of ARF. And we hired a professional photographer for the photographs. So, yeah.
Okay, so today we're talking about disrupting global payments. You heard already about challenge of cross-border payments and the challenges in specific regions such as Africa. I mean, I've been hearing here last 30 minutes the very interesting speeches of the previous panels, and that's also something we're going to talk about now. We were actually in MTN last week in Dubai for a conference, and there, as in any other countries where there is a big diaspora, a problem that really you feel is the issue of diasporas to send money back to their families and their relatives on a daily basis. No? So that's something pretty important. Because payments never sleeps, but banking does. No, the payments. Payment needs are 24/7 in the morning, at night, during the day, and the way in which the current banking infrastructure works is not able to provide that service. Or well, it's able to do it, but through few inefficiencies. And the main inefficiency that we at ARF tackle from the inefficiency of the banking infrastructure is the prefunding issue. So the way basically MSBs, which is our specific segment of reference, the way MSBs transact and move money globally is through prefunding. I'm sure most of you are familiar with the issues of prefunding. Prefunding is necessary because, as I said, the banking infrastructure doesn't work 24/7. And also, of course, because of trust issues. No, I mean, you don't trust. In order to trust an MSB that is operating from the other side of the world, you want them to prefund. This means that 4 trillion of USD are actually locked at any given time in prefunding. That's a huge amount of money. Which also brings us to one of the main issues of the MSB industry, which is the scalability of the business model of MSBs. No? Locking such a big amount of capital makes it extremely unscalable for an MSB to start. I mean, there's a big barriers of entry, not only to start, but also to scale. One of the previous panelists was actually talking about also the, briefly mentioned, we showed a few main points, few main issues, and one of them was actually the scalability. No? And prefunding plays a big important role there. So what we want to do what we do at ARF and the way it started is basically moving this payment financing concept, which de facto is the prefunding, onto the blockchain. So basically trading time to value, this concept of the payment financing, we're bringing it into the blockchain. We're doing it using leveraging stablecoins. So how are we solving the main issues that come from prefunding, which you see listed here? No, inefficiencies of fiat, limited growth, capital constraints, and scalability. We do it in a very simple way. Often complex problems have easy solutions, and I think that's the case here. We do it with a revolving credit line, with loans. The interesting thing is that we do it with loans, but leveraging stablecoins. So what that means is basically that stablecoins are, first of all, much more efficient than fiat. They're not linked to the traditional bank infrastructure, hence to the inefficiency of fiat. So one. Two, because it's a revolving credit line, it resolves the problem of scalability. You don't need to lock your own capital as an MSB to fund a specific corridor. But you can use a revolving credit line with us. So for instance, we have a client that started with us 2 months ago. We started with 1 million facility each day. Now we do 2 million. It would have been impossible for them to scale from 1 million to 2 million in 2 months. That's an example. But Baran will go more into detail with current customers later. And then, of course, the treasury efficiency. So apart from scalability and the greater efficiency of stablecoin, the value we add is better treasury efficiency for MSBs. So instead of basically head of treasuries wasting a lot of energy into trying to understand where to allocate their capital so that each week they are able to face the pre-funding needs that they're going to face, we provide them with the option to use a revolving credit line, which makes that easier and in certain cases cheaper for them. So that's, and as we said, this is impossible to solve with fiat money. PayFi. So this brings us to the concept of PayFi, which I briefly mentioned earlier. As I mentioned, the pre-funding, I mean, this huge issue of having $4 trillion of pre-funding locked at any time, anywhere in the world, is de facto a payment financing issue, right? So we are trading basically time to value. So we are bringing this concept and we're bringing it to blockchain. We are doing it using stablecoin. Now, our bread and butter, however, to do that is stablecoin and regulation. So we are a Web3 native company, but we're operating in a traditional financing scope. And in order to do that, we need to be regulated, obviously. And we are. We are regulated in Switzerland. We have an SRO license overseen by the FINMA. And that brings me to, so that's basically the how. No? So if I can step back. Before I explained you the why, no? So why we exist, why we do what we do. I just told you the how. No? We use stable coins and we're regulated. Now let me tell you the what. So we bring this service to, first of all, to cross-border payment companies. That's how we started. As I said, resolving this $4 trillion pre-funding issue. But we're also addressing other needs of other players, which again are linked to the inefficiencies of the traditional banking infrastructure. I'm going to go more in detail later, but just some of them are OTCs, facilitating on and off ramping, and facilitating redemption of tokenized assets, for instance, treasury bills. I'll not go much into detail on those two, but please, if you want to discuss how we support OTCs or the redemption of tokenized assets, happy to chat later.
All the milestones Donato just explained didn't really happen in one day. And I'm sure we all, went through the same stages. So as a startup in fintech industry, we have a long history to go and some mistakes conducted in between. ARF was founded in 2019, and it launched a crypto payment gateway. And soon enough, it turned to a P2B payment infrastructure, leveraging Bitcoin. Back then, we were all trying to look for some real use cases for the skyrocketing blockchain technologies and crypto. But soon enough, we realized that Bitcoin was not really a suitable intermediary for payments, so that idea was left. And with this learning, we also shift our focus from a peer-to-peer payment to B2B payment. And we start using stablecoins instead of Bitcoin itself. Again, it was the period to start building up some use cases for stablecoins and leverage those. With the help of those insights, we started establishment settlement network for financial institutions. This is the time that I joined the company, and I have spoke with many people from cross-border business, and we all know that creating a network is not an easy job. So there are many moving parties that you need to bring together. Those periods help us to understand the pain points of financial institutions. We spent a lot of time with them, and then we realized that there is a bigger opportunity than the network itself, and we come up with the following product.
Correct. So basically, in 2022, we became regulated. As I mentioned earlier, we have an SRO license in Switzerland. And we closed one of the biggest seed rounds. So we had already a pre-market validation, basically, of our idea, which is the product that I just described earlier, so ARF Liquidity. Last year, in 2023, we managed to finance 1 billion on-chain credit of global payment transactions. So that's a huge milestone for us. And in 2024, again, excited time, we merged with Yuma. We raised a 38 million, close to 40 equity round. And together with Yuma, we launched the PayFi. What I described earlier, the basically locked prefunding capital, that's just one piece of PayFi. No, PayFi, again, is basically payment financing, which is bringing time to value to the blockchain. And the concept of prefunding, which we have been validating over the past 3 years, and I'm going to describe you the number of that validation, but that concept is just one piece. So we are just at the beginning. The best is yet to come.
As I introduced myself at the beginning, I do client success efforts on our side, meaning that my day-to-day job is to keep our clients happy and growing. And I'm constantly asked what kind of clients we have, where are they located. So let's check the graphs before. Those are the prominent clients and their money flow that we support with our working capital. We have clients located in the United States and funds being moved to Mexico. It's a huge corridor, very well known by many industry players. We also have money flow from United States to South America. Europe to Africa corridor is quite prominent as well. We have flows from Europe to Turkey and Southeast Asia, again covered UK part to the Southeast Asia as well. Those are only some examples to display that we really do not have any kind of limitations for our client base. We only require them to be licensed in the jurisdictions that they do payment services. That's it. Now I would like to talk about the real use case of an existing client. One of our very first clients here, they were really struggling. This is a licensed remittance company. It was really struggling to compete with the large global players. They had its own money locations, small cash pickup stores in Europe, but their customers were willing to receive the funds in the next day settlement format. It is becoming the industry standard for remittance business to send the funds to next day, if not the same day. People really do not want to wait like for 3 or 4 days to money to arrive to their loved ones. But they didn't have enough liquidity to do the prefunding. That's why they ended up signing with their competitors with a very, very bad margins so they could fulfill the next day settlement as their clients requested. This ends up their revenues to drop drastically. And also, meanwhile, remittance from Europe to Africa was booming, but they didn't really have any capacity to increase their market share because they didn't have the liquidity. And then we were introduced by this team. They were trying to find out some solutions. They, of course, went to the traditional sources, traditional liquidity sources they went, but they soon realized that long-term capitals, loans from banks are not really doing any help to them. And let's be honest, banks' traditional resources, they do not really favor remittance and payment businesses. So it's really hard to access traditional sources of capital via them. And we start working on their flow of funds. And this is what we do for each client. We get into their flow of funds in detail. We know their pain points and come up with tailor-made solutions for them. So we introduced them our unsecured credit line, the short-term credit line, 1 to 5 days. So instead of prefunding, they had access to our liquidity pool. They were able to make same-day settlements with their partners as their clients request. They all need to do the repayment in the 1 or 5 days of repayment cycle with an interest margin that we applied. So they didn't really need to lock larger amounts of capital from their end. And they, eliminated their agreements with their competitors that resulted in their revenue to increase drastically. And this was back 2022 November. So it has been 2 years that we are working with this client. And, it was great to see their thriving period, not only overcoming the liquidity problems that they face.
Perfect. And so we just said earlier that in 2022 we raised a seed round. And that was initial validation from the market. However, I think we can confidently say now that in 2024, did achieve product market fit. In the last 18 months alone, we achieved more than 2 billion on-chain transaction volume, 0% default, more than 100 million financing on-chain credit on a monthly basis, which is only growing. The goal is to do 1 billion on a monthly basis by the beginning or first quarter of 2025. And I think that's, again, I want to say it again, these are clear signals of product market fit. So the opportunity is there, the solution is there. How are we going to address it? Well, this is, again, a 4 trillion opportunity if you only look at the pre-funding needs. So clearly, there are vertical diversification strategies that we need to adopt within the segment of MSBs. When I say vertical diversification strategies, what I really mean when we're talking about MSBs are the corridors that we cover. So treating the global cross-border payment market as a single bucket, it's wrong. So we need to break down basically this TAM of 4 trillion into, on a daily basis, into different corridors, different jurisdictions, which each of them have the different peculiarities, different rules. And so as Baran said, basically we already are present everywhere globally, but there are certain areas in which definitely we can do more, and we are doing more. LATAM, Africa, Middle East, APAC, which for us is extremely important, Singapore, it's extremely important hub. These are all areas where we definitely are betting pretty strong, and where we aim to grow pretty fast and strong in the next months. So that's what I mean by vertical diversification strategies. Then in terms of horizontal diversification strategies, if we go back to what I said at the beginning, everything starts from the inefficiencies of the traditional banking infrastructure and what those inefficiencies bring to financial institutions. MSBs are just one part of the problem. It's a huge market for us, but it's just one. Then we have OTCs, on and off ramping, how we can facilitate that. Redemption of tokenized assets, and many other use cases, which are again linked to the inefficiencies of the banking infrastructure, which we can solve by bringing the payment financing concept into the blockchain and leveraging stablecoins.
The number Donato just named are great, but it doesn't mean that we are not aware of the risks and we do not take any mitigations. All kind of money businesses has their own risks in it. This goes for ARF too, and we usually categorize our risk profile into two, financial risks and the technical risks. For the financial risk perspective, Donato said that we have zero default at the moment. But this doesn't mean that we have preventive actions in between. We do have our own credit risk scoring model that we went through for all clients at the beginning. And then we pay very close attention to our clients' financial health. We do regular checks with their finances just to make sure that everything is going as suggested. And on top of this, we are communicating with them basically a day-to-day basis just to see how their business is doing and if we need to pay any specific attention to any point. Fraud risk, yeah, this is also a risk for any kind of credit provider. I may say we are copying traditional players' actions here. We are just taking their good sides and leaving the bad sides behind. We have our own KYB checks doing at the beginning of our conversation with the clients, and then it's being repeated on a yearly basis, again, just to make sure that from the compliance perspective, everything is working fine. And we recently added the liveness checks to our systems as a new development just to be on the safer side. And regarding late repayment risks, the credit line we provide is 1 to 5 days, so the repayment cycle is quite short. That gives us an opportunity to realize if something is not going right with the client as soon as possible. We have our own automated checkpoints internally that alert the team if there's any, delayed on the repayments and if any actions needs to be taken during that period. For the technical risks, I'm not a technical person, but I will just, inform you what our team informs us, we have the custody risk, but it is being sorted out with the help of Circle. We work with Circle at the moment. Circle being a regulated company, ARF being a regulated company, gives us a lot of comfort. We went through regular compliance audits and financial audits and security audits on our side, just to be on the safe side. This also helps us to eliminate some cyber security risk on top of the security protocols we have.
Okay, so what's next? Everything that you read here and everything we just described, right? So we are just at the beginning. With ARF, we've started to bring the prefunding issue to the blockchain through payment financing, PayFi. We want to scale that. We do want to have a TradeFi and Web3 native banking. That's a goal. As we mentioned a couple of times already, we do aim for global expansions, especially to specific financial hubs, which are critical. As we start with the MSBs and the cross-border payments, of course, there are some financial hubs which are more important than others. Just to mention Singapore, for instance, Hong Kong, and of course, US is extremely important for us as well. London, UK, here, we're very busy meeting clients. So definitely expansion for us is important. Not only Europe, but also elsewhere. And then, as I mentioned earlier, our goal is to bring 1 billion financing per month in the next weeks, months. Now we are at probably close to 150 million, but we are, as I said earlier, we are raising capital fast. We are going to deploy it faster, and that's going to lead us to probably to reach this 1 billion pretty soon, hopefully. So 7 minutes left. Thank you from Donato and Baran.
Yeah, thank you so much for attending us today. If you have any questions, we can just cover them now, or we could have a chat afterwards. We are here today and tomorrow as well.